Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines for you at this hour. Nifty's recovered nearly 50 points from the day's low, bounces from its 20-day moving average level of 11,650. Most sectoral indices continue to trade with losses. Yes Bank is the top loser on the index after it reported a 1,500 crore loss for the March quarter. The stock has seen its biggest intraday fall in 7 months. The other private bank lending the losses is IndusInd Bank, which has also seen its biggest intraday fall since October 2018. Hero MotoCorp is also among the top losers on the index today after reporting its weak fourth quarter numbers, and also management has guided to maintain margins around the current levels. And Nifty IT index is bucking the trend today by being the only sectoral gainer. HCL Technologies has scaled lifetime highs in today's session and is also the top gainer on Nifty. Good afternoon, Neeraj. Well, it's selling across the board, but I guess some respite coming in with buying coming in IT pack and also some select stocks on back of earnings.
Yeah, Nadia, Navneet, we were talking in the morning in the trade setup as well that it'll be important to see if IT sees some buying, that has happened. But the sentiment clearly soured by what's happened at the NBFC space and Yes Bank earnings. So I think these two will remain center stage today. Yes Bank might be a day more or something, but the NBFC issue clearly a clear and present danger. We'll talk about that with analysts as well a bit later on. However, let's tell you what's moving the markets. Yes Bank is moving the markets, pertinent to point that out, and as a result of which the Nifty Bank is down. The Nifty is down about 0.6%, the Nifty Bank 1.3% lower, and the heat map will show you that the pressure that Yes Bank is exerting is quite there. It's also brought down a few other private banks as well. Maybe people are believing that there could be some accounts that could be similar for select other banks too. But look at IndusInd Bank, that for example is down about 6.5%. Indiabulls Housing Finance 8.5% lower. Hero MotoCorp has seen the impact of results coming in, and that's percolated down to other auto companies as well, two-wheelers, four-wheelers alike. So Hero 4.5% lower, Bajaj Auto 2.5%, Maruti about 2.5% as well. So all of those names too have come off. The stronger NBFCs too are correcting in the session today, with HDFC and Bajaj Finance down in the session today. So a lot of pain. Vedanta and some of the commodity names too correcting. What is holding out to an extent is IT. In terms of stocks with some pattern. So HCL Tech about 3.5% higher. There's strength in Infosys in the session today. HDFC Bank is certainly holding out. Kotak Bank, out of the numbers, is holding out marginally about 0.25%. This must be a move from slightly sketchy names to the safe and sound names, maybe, and which is why HDFC and Kotak are seeing what they are seeing. And JSW Steel from amongst the metal names seems to be doing okay. Steel stocks actually haven't had a bad day. Maybe some of the base metals are not doing all that well. So IT seeing buying, but Yes Bank and NBFCs, the biggest movers, clearly pain in the financial space.
Well, the market is clearly looking out for pockets where they can hide, investors. And for that matter, even if you take a look at the oil marketing companies, up until now, there was really no reason for them to run up because crude was anyways on elevated levels. But nonetheless, there was interest, there was buying action coming in. And today's session, since it's come off, there is still more buying activity. But yeah, these are the safer haven names that we're seeing in today's session. Mid caps and small caps, not so lucky. So while the benchmark indices are down closer to 0.5%, the brutality in the broader market is slightly more amplified. I want to take a look at individual stocks and certain results that have impacted stocks. Godrej Properties, the numbers were optically okay. You had almost a 3.7 time improvement in their profits. There was a lesser other income component, but remember, the stock has run up heavily already. So it had moved up from levels of about 760, 770, gone all the way up until 960, from where there is some corrective action coming in and some profit taking on the stock. Orient Cement, not as high as the early morning trade of 13%, but yet again, exceptionally strong operational performance coming in there from Orient Cement, and the stock has been rewarded 6% higher today. Castrol is the other one that we're watching out for. 1% lower in the session. ADAG stocks completely thrashed out of shape. Take an Arnam, though not as much as the rest, but you have a Reliance Home Finance. Debt ratings have been junked, and you've got that down about 12.5%, almost 13%. Reliance Capital also down about 9.8%. The stock's ahead of numbers. We're watching out for Ambuja numbers that come up post-market hours. Ahead of that, the stock's down about 3% Exide, we'll watch out for the numbers as well. Slightly more muted, was up closer to 1% in early morning trade, but that's given up as we've moved through. And TVS Motors is the other one that's going to report numbers today. Ahead of numbers is down 3.5%. Volume buzzers quickly then, HDFC Asset Management. So what RNAM is losing, HDFC Asset Management is covering up for itself. It's up about 5.5%. PVR, live highs for this one. The stock's at 2.5%, 3% higher. And Trent on the back of numbers is not doing all that badly. Volumes is supporting the pricing action. But that's what you've got in terms of the broader market space. What's happening in the futures and options space, Navneet is going to highlight that for us.
Thanks for that, Davina. Well, we're off to a weak start for the week, but markets have actually recovered from the day's low. As we were mentioning, Nifty's recovered 50 to 55 points. It's defending its 20-day moving average of 11,650. We did see the lows coming somewhere about 11,655. Let's see where we end for the day, but currently Nifty is up above the mark of 11,700. The premium on the futures has definitely come off compared to Friday's closing, which is indicating probably there are some unwinding of positions taking place, or also there could be some fresh shorting which is taken at the top. The volatility continues to be on the higher side. India VIX in the morning session where it was up 4 to 5%. I think that's also cooled off from the day's high. Bank Nifty on the other side, as we've already highlighted, is weak owing to stocks like Yes Bank as well as IndusInd Bank, but the premium is maintained. No major open interest build up for Bank Nifty in today's session. Let me just highlight the most active strikes and what's the range one can watch out for this week's expiry. Maximum open interest is at the 11,800 call and the 11,700 put. For the day, we're seeing a lot of writing for the 11,700 call. Almost 12 lakh shares have been added there, and even the 11,800. So out of the money call strikes are definitely seeing some bit of interest, whereas 11,650, remember that's the mark we highlighted for you, and there is some addition in terms of open interest which is coming there. Nearly 5.5 lakh shares have been added for that one. Quickly, in terms of stock futures, Yes Bank remains the stock of the day, and it is still trading around the day's low mark. We've not seen any major recovery coming in. So the lows were somewhere about 166, 165. It's still at 168. Shorting seen on the futures side, open interest up nearly 16%. And also, usually you see SBI or Reliance Industry, their options are active. But today, if you look at the NSE's website, only Yes Bank stock options are very, very active. And there is some call writing which has been seen in out of the money strikes like 200 as well as the 250 call strike. HCL Technologies is the other one. Earnings come out next Thursday. The stock's active almost at day's high, 3.5%. Fresh long positions seen. Fresh highs for HCL Technologies around the current levels. And PVR is the other one which is quite active on the futures side because of the open interest addition, up 15%. Futures trade at a discount of nearly 7 rupees, but some bit of long positions have come in. Live highs for this one. This too reports its earnings next Friday.
Shibani Sircar Kurian of Kotak Mahindra Asset Management Company joins us right now on the show with her thoughts on what's happening in the markets currently. Shibani, clearly the local debt issues coupled with the numbers that came in from Yes Bank have taken their grip on the markets. No alarm bells. We're down about 1/3 and nothing too dramatic, but the sentiment is a lot more sour. I want to understand what your thoughts are when it comes to this pocket, and whether there could be some prolonged period of pain because of all those conversations about the kind of repayments that are due from the NBFCs in what is arguably a wave 2, and if they fail to honor them, then the impact that happens on that entire space. How have you analyzed this pocket?
So let me just split it into two parts. So first, let's talk about what's happening on the NBFC side. On the NBFC space, clearly there are two issues that we need to deal with. One is on the liquidity and availability of funding, and second is on growth. And here there is a clear demarcation between NBFCs, which have a strong parentage, which have granular retail asset franchises, which have always been maintaining ALM profiles which have been well matched, and those which have had a more chunky book. So there is availability of funding, but clearly there is a demarcation into who gets funding easier than the other. So I think that's one issue. Second is the cost of funding clearly has gone up, and while there was a period of time when cost of funding was coming down, but it's still at elevated levels. And all of this means that growth clearly is a challenge in the NBFC space. There will obviously be some outliers. The stronger NBFCs, as I mentioned, with a good parentage, who have always had a very granular asset franchise, who've been maintaining well-matched asset liability profiles, those NBFCs gain market share in this sort of an environment. And therefore, one has to be extremely picky and choosy in terms of what kind of stocks that you really want to invest in the entire NBFC space. We've been extremely cautious on NBFCs, especially those which have had chunky exposures on their loan book. Our focus, as I mentioned, has been on those which have had more granular exposures. But overall, as a space, we've been cautious, and that's how we continue to position ourselves in the portfolio.
Shibani, the other question would be, what happens to NBFCs that were the poster boys of growth per se, and are under stress right now? Various reports doing the rounds, right, about what some of those companies which are wholesale funded, have high exposure to stressed assets, etc., might go through because they'll not be able to repay on time, simply because they've sold off assets in round one of the pain that they envisage immediately post RNFS to meet the repayment obligations. They might not be able to do it this time around, and even if they manage to do it, they will be sacrificing big amounts of growth capital, and therefore the equity valuation on those companies will be next to negligible for the next few quarters at least, and therefore they might not be good purchases. Do you reckon that's a clear and present danger, that some of these NBFCs might see their equity value either erode quite significantly or just meander around the current levels?
Yeah, so I think what you're saying is correct. When the NBFC run-up happened over the last 2 years prior to this liquidity issue that presented itself, the reason that NBFCs were getting re-rated was that growth was extremely high, and clearly they were gaining market share from the banking sector, and that was reflected in valuations. Now, clearly you have a situation where they have a problem on their liability side, where either, even if they have funds available to them, it is coming at a cost, and therefore growth does take a knock. So I think, yes, there would be a period of time where, here I'm generalizing, of course there will be some who will be able to manage the situation much better than the others, but overall the growth levels that you've seen for NBFCs and HFCs as a pack would definitely come off. And so if you are going to give a multiple for growth, that multiple would be impacted in this kind of a scenario. Where that growth would go will be clearly towards the banking sector, where banks which have a strong liability franchise, which are adequately capitalized, will be able to gain market share from the NBFC pack, which clearly have issues on growth. So painting everybody on the same brush would be unfair. There would be certain NBFCs who would be able to manage and navigate the situation better. They will emerge stronger, and they will gain actually market share from the rest of the NBFCs. Whether there will be further defaults or not, that is something that I really can't take a call on at this point in time. But it is clear that there will be an impact on growth levels coming off from what you have seen over the past few years, when NBFC growth rates were much higher than what it was for the banking sector.
All right. Shibani, two parts to my question. One, obviously, since you're saying that the NBFC growth rate is going to come off, they're not going to be as heady as 22%, but would you say 11, 12% is something that's doable within the NBFC space? And the other part that I want to talk about is when you're speaking of defaults, I mean, there have been a slew of cases now that AMCs and mutual funds have had exposures to, and where you've seen write-downs happening in a big way. I mean, what does that do in terms of the overall sentiment around some of these stocks and the market perspective as well, because there's a lot of investor wealth getting eroded here?
So like when I said, when I talk about growth rates, it will be very difficult to paint the entire NBFC sector as a whole, because each of the NBFCs fund different parts of the entire lending space that we have. So I think growth rates would be better for those NBFCs which have clearly had a diversified loan book, which have had a more granular retail loan book, and maybe that's where the growth rates would be better. Those who've had chunkier exposure to corporates, wholesale, the growth rates would slow down far more than those with retail exposure. So that's how I would like to characterize growth rates in the NBFC space. Difficult to paint everything on the same brush, but yes, I think there would be some pockets which would do better than the others. But clearly, yes, if you look at as a whole, the kind of growth that you saw over the last few years, that growth would moderate.
Okay, moving away from NBFC, a space which is witnessing liquidity issues. Shibani, the other pocket which is seeing some buying interest, and we've seen from the numbers that have come by, is from the cement pack. The leader itself, Ultratech, posted good set of numbers. And also we've seen, if you go by the trends of last few months, the prices have gone up. The volume growth which is being reported is pretty strong. And, you know, there was a general expectation that before the election, cement prices may not go up. But clearly there's been demand which is coming from the real estate side, especially from the low-cost housing space. What's your assessment with regard to this space? Ultratech has already reported its numbers. Do you see this buying interest continuing even in the coming quarters?
Yes, so cement has been one sector where we've been positive for a while. So initially, like you mentioned, the pricing action was eluding us, but over the last 2 months, we've clearly seen very strong pricing action, especially in South, and now it's catching up for the rest of India. So that bodes well from cement sector profitability as a whole. Also, the impact of cost pressures coming off is being felt in terms of better margins. So I think overall cement as a sector is on track to report fairly strong numbers. If you look at it structurally, what's clearly happening is that demand continues to remain fairly stable and buoyant. So if you see volume growth, which has picked up to 6-7% for the sector as a whole, if that trend continues, the incremental supply additions will be lower than volume growth, which means capacity utilization levels improve for the sector, which means better profitability. So I think yes, the very fact that price hikes that have been taken by the companies are holding on, that's a clear positive, and I think that the sector should exhibit better profitability over the next few quarters as well.
Okay, Shibani, just one final question really. A lot of portfolio managers are starting to take exposure to pharma, believing that the relative valuations compared to what used to exist a few years ago are much cheaper. The growth might be coming back even from other markets like the US, etc. Is that a reasonable argument to make? Do you guys have, or are you making a slightly higher sized exposure to pharma, even though you may not have enough presence on the Nifty on the weightage front per se?
Yeah, so we are looking at pharma names, but it is pretty much stock specific, bottom-up approach on the sector as a whole. From a sectoral trend perspective, couple of things. One is that the domestic business continues to remain fairly stable and steady, so growth there is stable. Secondly, on the US side, the pace of decline in terms of pricing on the generic side has clearly started to abate. The decline is still there, competition is still there, but the pace of decline has started to kind of close to bottoming out, which bodes well for the space as a whole. So yes, there are certain opportunities, but one would have to be stock specific in nature depending upon exposures to both the US as well as the domestic formulation side, and we are approaching this on a pretty much a bottom-up approach from a sector perspective.
Okay, Shibani, we'll leave it at that. Thanks so much for taking the time out and being with us and giving us your perspective. Really appreciate your time. Okay, as we speak, just before we move on to the next piece, I'm told that Exide numbers are out. We should just get the stock up on your screen for a moment, because the numbers presumably have come out slightly better than what the street was working with as well, and therefore the number is a reasonably positive one, 216 for now. Okay, those are the numbers on your screen. The revenue at 2,600 odd crores, the expectations were 2,630. The net income at 210 or 11 crore rupees. The expectations were about 185 crore rupees. So certainly the net profit numbers have beaten estimates in Exide Industries, and as a result of which that stock is duly reacting 1.89% or 2% higher for Exide right now.
Right. In fact, it dipped in early morning trade. It was up closer to a percent and a half. Post that, the stock gave up most of its early morning gains, and now once again with this kind of number that they have posted, it's important to see what happens to their margins as well, because for Exide Industries, expectations were that there's been not much of a change on the margin side. That's what you've got in terms of the overall numbers for Exide Industries. Individual cost breakup is coming in, and then you've got the revenue figures as well. Closer to 2,600 odd crores is something that they've clocked in. So that is looking like a strong set of numbers. We had to to obviously watch out for various other factors like that could have probably aided these numbers. There was an expectation that the fall in the lead prices by over 10% would aid margins year on year, but we still don't have those margin numbers for Exide Industries. I think 13.5 was the expectation for the margin number versus 13.7, so not much of a dip. Just a 20 basis point dip was expected, but that's what you've got in terms of the profit number. 211 crores versus an expectation of 185 crores, so a beat of almost 26 crores on the profit number. And this sans any other income, because the expectation was there was going to be a lower other income component, a higher depreciation was likely to hit profit growth on a year-on-year basis. But considering the profit number itself has come at 211 crores, this is more operational beat.
Yep.
That's what it looks like.
I think the depreciation is still sequentially, it's not gone up by a lot. It's 83 crores, and cost of raw materials is also about the same. I'm comparing the numbers sequentially. Of course, on year-on-year basis, it's gone up. So operationally, I think it's looking like a beat. The stock has also gone up, but we'll get you the margins in a while for Exide Industries. But as of now, the numbers look better than what the street was expecting, and hence the reason why you've seen the stock moving higher. 2,600 with regard to the top line, and also the bottom line for the quarter has come in at 210. Okay, that's Exide Industries for you, but let's move on and talk about a stock which everybody has been talking on the street today, and that's Yes Bank. The stock's down close to 30% in today's trading session after it posted a 1,500 crore net loss for the quarter gone by. And with regard to the exposure, there was exposure seen in IL&FS and also slippages coming in from an aviation account, which were some key factors behind the loss that the bank reported. Shefali Malik is here to tell us the key takeaways and key 5 takeaways, Shefali, from the numbers. Over to you.
Well, the most important takeaway from the Q4 earnings was basically the kind of provisioning that they made. Their NPAs inched up and hence a higher provisioning, and there was a contingent provisioning of about 2,100 crore rupees, mainly on the back of in aviation account and also because of IL&FS exposure that they have. Other than that, the guidance that they've put out, that has not gone down too well with the street. They've put out an ROA guidance of about 1% by 2021 and 1.5% over the medium term. So the street is not able to digest that, and they are basically skeptical about this particular guidance, and not just the ROA guidance, about the internals as well. The street is not very convinced with the asset quality picture that the management is painting. So the management has said that the watch list is around 10,000 odd crore rupees. However, the street is skeptical about that and is of the opinion that the actual slippages may be much higher, as more skeletons may actually come out of the closet. And the credit cost guidance as well, because of the asset quality pressure, the guidance given by the management of about 125 basis point, according to several analysts, the management may not be able to meet that credit cost guidance, and it may actually be much higher than that particular level, and hence the kind of pressure that we are seeing on this particular stock, which refuses to die down in today's trade, refuses to be out of focus. So various brokerages have put out their note. City is saying that ROEs will be lower for longer. Macquarie is saying that we can expect subdued return ratios on loan book cleanup, investments in retail business, and on pivoting of business model within the corporate segment. Morgan Stanley is saying that they expect about 0.7 to 0.9% ROA in the next 3 years, so much below what the management is guiding. Goldman Sachs is saying the key focus areas are going to be capital raising, confidence on asset quality, improvement in cost to income ratio, revenue mix, and execution of strategy. So that's a brokerage verdict on Yes Bank. Majority of the analysts have actually downgraded the stock with huge cuts on the target price.
All right, Shefali, thanks a lot for bringing those key takeaways with regard to Yes Bank's numbers. But one brokerage house that maintains a positive stance on the stock despite the results is Sharekhan. And to discuss this buy recommendation, joining us on the show is Lalitab Srivastav. Lalitab, first up, what multiples were you assigning earlier, and post the numbers now tell us what multiples are you assigning that you still have a buy call?
Yeah, hi. So clearly, this result changes a lot of things. But as of now, what we are expecting is we are assigning a multiple of around 1.6 times price to book for FY21. We do not expect that to be, a very tough ask.
Lalita, just stay on. Lalita, just stay on because I would want you to comment on Kotak numbers as well. They've just out on the screen. Would want your initial thoughts there. Net profit is coming at 1410 crores. The estimates were 1394 crores. So no disappointments, no big surprises. Marginally, actually not even higher. You can call this exactly in line with estimates. Waiting for the other numbers to come out, but didn't expect too much different from Kotak Bank. They would have been expected to meet the street estimates, and I think they have done that. Gross NPAs though at 2.14%, NIMs at 4.48%. These are the few numbers that I have. Provisions, I think, at 171 odd crore rupees. So that's the number.
There's a slight uptick in asset quality. Gross NPAs 2.14 versus 2.07 was there in the December quarter.
But that
and just a slight this thing. For net NPAs have come in at 0.75 versus 0.71, which was there in the December quarter.
Yeah, Lalita, any quick thoughts here on Kotak Bank? Just have these few initial numbers right now.
Yes, digesting the numbers, I think numbers are largely in line with expectations. Asset quality wise as well as NIM wise, also they seem to be in line. So I think, positive set of numbers.
The other thing I think with the street was watching out for, and as per my conversation with Shefali, she said that while the loan growth was expected to be more than 23% driven by corporate banking, the unsecured lending for Kotak, because they were focusing on that. So we need to watch out for whether or not they have increased focus on unsecured lending this time, in line with what the rest of the private banks have been doing. Lalita, while you've got the breakup of the numbers optically, if you go deeper into the numbers, we've not got those yet, but what were the key things that you were going to be watching out for from Kotak?
From Kotak, basically, one of the key things that everybody would be looking at is that, how the stake dilution thing pans out. As of now, the matter is sub judice. But apart from that, guidance on balance sheet growth and how the outlook is on the MSME front in terms of asset quality as well as other balance sheet parameters, they would be keenly looked at.
Within the private sector space right now that we've started to receive these numbers coming in from Kotak, Yes Bank being a case in point of its own, so not comparable to what the other private sector banks are likely to show. What is your sense of how this quarter could shape up for the likes of Axis Bank, IndusInd Bank, and ICICI Bank, in line with what we've seen coming out from Kotak?
I think we still continue to prefer private sector banks, and we are hopeful of ICICI Bank also expecting lines on the lines of how Axis Bank performed.
We've got the NIMs, Neeraj, at 4.48%. Provisions for the quarter are at 170 crore. The profits are up 25% for the quarter. Advances, the loan growth, that's 21%, which has been reported for fourth quarter. So looks like pretty much in line with what the street was expecting this time around. So as of now, I think the NIMs are looking stable and the numbers are pretty much looking in line. It's just a slight bit of asset quality deterioration, but not too much.
I think loan growth was also a bit of a disappointment because the expectation was above 23%.
It's 23%.
Above
Okay,
23%.
Advances growth, what they posted is about 21%.
So it's below the street. It's a slip on the
there,
advances on the loan.
Lalita, we will let you go. Thank you so much for joining in today. I understand you have to make some calls. Kajal Gandhi with us to talk about these numbers as well. Kajal, a couple of things. Asset quality by and large in line with estimates, maybe marginally higher, but a couple of other wrinkles as well that come out. What did you make of the Kotak numbers?
Broadly, the numbers look largely in line. A small dip in asset quality will not make much difference considering the size and that they don't have very high NPA book as of now. So bottom line and provisions are largely in place. Slightly lower NII it appears, though margins are quite good. I think broadly in line.
Do you think that the expectation was more than 23% growth in terms of their loan growth? That has been that slipped a bit to about 21%. But is that a big concern, or you think that's probably just a one-off?
Yeah, because we were also building in a 22% kind of growth. So a 21% kind of growth is not very disappointing considering they have managed on the margins and overall bottom line and controls on the asset quality are still there. So considering that, it doesn't appear to be a miss.
What was the expectation when it came to the NIMs, Kajal? I think they've posted 4.3% for the entire fiscal year, and for the fourth quarter, it's about 4.48%.
So yes, for us also quarter on quarter it was appearing to be on an improving trajectory, but the improvement has been quite good considering this 4.48% NIM for the year.
Okay, so on parameters, across parameters, what you're mentioning is the numbers pretty much look in line. What's the house rating on the stock, and would you rejig with regard to the target price after the numbers?
We have a hold rating currently, and we'll be mostly maintaining it.
Okay, thanks a lot, Kajal. We'll leave it at that note. Appreciate you joining us and taking us through your views on Kotak Mahindra Bank's numbers, which are pretty much on not all parameters, a slight miss when it came to the loan growth. We were expecting a 23%. The companies reported a loan growth of nearly 21%. Kajal mentioned a slight slip with regard to asset quality may not make much of a difference for a bank like Kotak Mahindra Bank, but it's a slight bit of deterioration has been seen. The NIMs 4.3% for the entire fiscal, 4.48% when it came to this particular quarter, and CASA ratio as in March 31st, 2019 for the bank stood at 52.5% versus 50.8%, which was seen in the previous financial year. The stock, however, has reacted negatively post the numbers. We'll see if there's something which is attributing the loss that we are seeing on the screen with regard to the prices. I think the stock's fallen nearly 17 rupees after the company declared its numbers.
You know, these trading losses notwithstanding, I'm just wondering when banks like Axis have, or other Yes have come out with the numbers that they have, and the increased polarization that we may see towards quality, these trading reaction notwithstanding, don't quite know, despite the fact that it's expensive, if investors can choose to stay out of Kotak Bank or shun Kotak Bank in favor of something else. So.
Because it is, Neeraj, quite an expensive stock within the entire pocket. So 5.4 times price to book versus an ICICI Bank at 2.8 times, IndusInd Bank at 3.2 times, then you've got an Axis Bank at 2.19 times.
Yeah,
so in the stack.
But the history will show that it's
so
kind
which
of
means
at
that
the same level all the time.
Which means that you expect a lot more from the likes of a Kotak Mahindra Bank in terms of the delivery performance.
I don't know. I just somehow find it tough to believe that the street will punish it vehemently for 1 quarter of a small miss and that too, the miss is by 100 basis points. So don't quite know if that will really react. But for now,
technically, it's not been punished that much. It's just down 1.5%.
That true. Yeah, it's just about 1.5% lower. Anyways, 13.57. Let's wait and watch what happens here. We'll get the technical experts going in a bit as well. Kotak Mahindra Bank, of course, remains the biggest talking point at the current point of time. But the markets by themselves too, with the kind of pain that the Nifty bank is in, also remain the talking points. The question mark only will be that what happens to some of the beaten down names and what happens to a Kotak Bank over the course of the next few hours. While we wait for that, it's also important to highlight one more set of numbers that came out, which came out of the weekend, of course. Cholamandalam, Dewan.
Yeah, Cholamandalam reported its earnings over the weekend, and while net income saw a rise of close to 30%, asset quality too has improved. Let's discuss the quarter gone by with D. Arul Selvan of Cholamandalam Investment and Finance. He's joining us right now on the show. So thanks very much for taking out the time. It's been a decent quarter for you. PAT has grown 2% though this time around. Operating expenses were higher for you. Could you put the quarter in perspective for us with regards to the key deliverables?
Yeah, in this current quarter, we saw a little bit of a NIM compression because of cost of funds going up because of the liquidity crisis, and also because we needed to carry liquid cash, and which has got some amount of negative carry. But that is something which we are addressing, and the mix in our lending side is changing progressively, and you will see in the next few quarters that the yields will improve and the NIMs will bounce back to the normal levels that we used to be clocking. On the expenses side, we had been in the process of putting up 100 more branches, which is going to be operationalized in Q1, and that's where you see some amount of cost increase both from the investment in the new branches as well as recruitment for these branches taking place in this quarter to be ready to run it from day one of Q1 in FY20. From the NPA perspective, we had a good quarter. We have progressively reduced our NPAs, which is currently measured as stage 3 assets under the new Ind AS, and you can see that it is at an all-time low in the current quarter, and we expect to maintain it at these levels in the coming quarters, because we have been we have put in a lot of systems in place from a vehicle finance perspective with regard both the underwriting side as well as on the collection side to make sure that we keep our loan losses at a low level. So we look forward that in the coming year, though there are.
Right. Okay. I think we've lost the feed of Mr. Selvan out there, but nonetheless would like to get his views on and what exactly is the liquidity situation, because the NIMs remained at subdued levels in this quarter because they held back some amount of cash in order to maintain those liquidity and manage those liquidity positions, which he said that they are looking to rectify in the coming few quarters. We'll try and get more perspective on the auto side as well and the vehicle finance business, since industry-wide, they stand at a very strong position, and how that is going to pan out going forward. Mr. Arvind Selvan, I want to come in a little bit with regards to what you spoke about liquidity. You said that you kept extra liquidity in balance to manage the liquidity during the quarter, and that's probably the reason why NIMs have remained subdued. What is the course of action now to make sure that you course correct with regards to liquidity?
See, we will continue carrying little higher cash levels until the market improves on from a liquidity perspective. As you can see, there have been a lot of turbulence in the market, and there's a lot of redemption pressures on the mutual funds. So that has put the availability of quick placements of NCDs or CPs a little bit difficult. However, thankfully, from Chola's perspective, we have good amount of credit coming from banks, so we have been able to borrow from banks, and we have also started tapping the overseas market. We have done already a small quantum in the FY19, and you will see one more much larger quantum happening in the current quarter. So we are looking at and we are tapping different avenues to make sure that the liquidity flow is unrestricted to sustain our growth.
Let's talk a little bit more about the auto loans growth. It's been the industry best growth of about 30% year on year. Considering how the auto sector itself is reeling under pressure, do you think that these growth numbers of 30% plus are maintainable, and therefore your market share within the segment?
See, if you look at it, we have a bouquet of products, right from heavy commercial, light commercial, mini lights, cars and MUVs, two-wheelers, tractors, construction equipment, etc. So we are able to keep moving in tandem with where the market lies, and we are able to keep continuing our growth story intact. So this has helped us, instead of being focused on one segment of the auto market in its entirety. And I think with this sort of flexibility to keep moving, we will be able to sustain our growth. However, we do see certain amount of headwinds in the upcoming quarter. There's a Q1 and Q2 because auto is really going through a little bit of a bad phase. But in Q3, Q4, you will see much more turnaround happening, because we expect a lot of pre-buying happening prior to the shift to BS6.
All right. Got that. Mr. Arul Selvan, thanks very much for joining in. Congratulations on a good set of numbers. The management there saying that while obviously it is slightly damp in terms of the vehicle loans right now, next few quarters, because of pre-buying, once the BS6 norms come into place, that should take care of the overall loan segment from the auto segment.
Well, let's wait and watch. Chola came out with a reasonably good set of numbers, and while that is still doing okay, just about 1.5% lower, can't say the same for some of the other NBFCs. Let's talk about that and more with Amar Singh of Angel Broking, joins us right now on the show. Amar, let me cut straight to the chase. What do you do with the Nifty bank that is looking like under some pressure, led by Yes Bank, and the sentiment around NBFC is looking weak? What do you do with this index, What are the specific stocks that you're recommending today?
Yeah, a very good afternoon. See, what we are seeing in the index and particularly Bank Nifty, I had spoken last week also that we continue to see bearish divergence on the Bank Nifty daily chart. So that's the reason we are seeing this sort of choppiness. And also, if you look at Bank Nifty, somewhere it is having now very strong support coming around 29,450, 29,500 levels. Because if you look at the stock if you look at this index from almost 30,000. 656 I'm talking about, and then it has corrected all the way to 29,450, bounce back from there. So 29,400, 29,500 zone is a very crucial support zone for Bank Nifty. If it breaches that level, then we'll definitely see a very sharp sell-off happening in Bank Nifty towards 28,400, 28,500 levels. So there could be a sharp sell-off from those levels. However, on the upside, I would say somewhere consolidation, and on the upside 30,000, 30,100, that's the upside level that seems to be capped. So it's more of a range play with the short-term trend definitely being on the bull side. And however, what is the positive lining is that it's in oversold territory. That's the reason we are witnessing a pullback, but more or less consolidation. Higher levels will be sold into, and lower levels till the time we don't see a break below 29,400, 450 levels, there would be buying support coming around those levels.
Okay, that's the call on the Nifty Bank. Amar, very quickly, specific stocks and a call on Yes Bank. What for the levels?
Yeah, sure. First, I'll talk about specific stocks. One is Balrampur Chini. If you look at this particular stock, the stock continues to do extremely well, even when the market is witnessing a sell-off. Technically, it's very strong on the short-term charts as well, apart from being strong on the long-term charts. Thirdly, if you look at the momentum built up, that still is there to stay. So this is one stock one can look at. So any dip towards 148, 150 levels, ideally it's trading around these levels only, can be used as a buying opportunity with a stop loss of 144 and a target of 161 on the upside. And the second stock one can look at is Muthoot Finance. This is one stock which did correct. If you look at it technically, it had corrected all the way from 628 levels, and it has bounced back over the last couple of days from almost 570. So this is one stock one can look at. Technically, it's strong on the intermediate and as well as the long-term trend. Short term, it's moved in oversold territory. So this is one stock one can look at buying. So Muthoot Finance is a buy around 590 levels with a stop loss of 578 and a target of 618 on the upside. And Yes Bank, you had asked. So Yes Bank, if you look at this particular stock, what we are seeing here is that the long-term trend for Yes Bank continues to remain bearish. And then over the last couple of days, it was consolidating support, taking support around 230 levels. Today has been a very sharp correction on Yes Bank. And if you look at the charts, technically, the low which I had made in second week of February, 168. So it's currently trading around one of those levels. So breaching that level or breaching 165 levels on the downside could take it towards its earlier low in November. That was around 146, 150 levels. So the stock definitely seems to be in for some selling pressure. So we'll have to watch out whether it sustains about 165 or not.
Okay, that's the technical call coming in on Yes Bank, and the stocks remained under pressure throughout the day. At any level, there is no buying which has emerged so far for this stock at 167. Now, let's also bring in Sacchitanand Uttekar of Tradebulls, who joins us now on the show. Hi, Sacchitanand. Good afternoon. First up, a call on the index. We've crossed 11,700 multiple times today, but there is some supply which is coming in there. Around 11,704 now. Is there any trade that you would take on the index?
Good afternoon. Yes, we expect the markets to remain oscillating within this range of around 11,700, 750 on the higher side, which could be in the supply zone. And on the lower side, I think 11,550 still holds as a very strong support base. So if you look at the overall movement, we expect the markets to remain mean reverting within this particular band. And since we are again approaching the higher end of the band, I think it will be prudent to initiate some short positions here. 11,720 on the spot would be a very ideal level wherein some short positions can be considered. The stop loss for the trade should be placed around 11,765 on a closing basis. These are the Nifty spot levels, and a move back to 11,590, 550 zone could be expected in a day or so. So we expect the markets to remain in this particular consolidating zone for a while, and since we are trading near to the upper end of the band, it is prudent to anticipate a reversal back to the lower end and create some short positions.
That's a sell on Nifty futures with a target of 11,590. Sacchitanand, in terms of individual stocks for this afternoon, which are the strategies that you're recommending?
Well, we are going ahead with a long-short combination. ACC is one particular stock that we discussed even last week. What we have observed here is that the stock has broke down from its rising trend, and if you look at the overall pattern, there was a rising wedge formation which was there on the daily scale. We saw one of the move in the last week, and again we have seen a very good healthy pullback. So 1630 remains an ideal zone for this particular stock to create some fresh short positions. 1655 is the stop loss for the trade, and we are expecting a swing back to 1565 on a positional basis. So short positions can be considered in ACC. On the long side, we have a positive observation on RBL Bank. So if you look at last 4 weeks, the stock has been consolidating within a narrow range. On the weekly scale, we have seen multiple times, spinning top kind of formation, which occurs well with the overall trend. If you look at the daily RSI, we are seeing a fresh crossover on that particular same, and basically it indicates momentum. So we expect that the stock could see a breakout soon, and with that with an anticipation of a move towards 718, we are advising building long positions. The stop loss for the trade should be placed at 666.
All right. These are some stock ideas coming in from our technical experts. Avinash Gorakshakar of Joindre Capital Services also joining us right now on the show. Avinash, good afternoon to you. While we're looking at the mood of the market itself, today's session has been marred more by what's been happening to individual stocks, post numbers as well. Even though numbers have been in line, they've not been dealt with in a kind fashion for the likes of Kotak Mahindra Bank. But particularly if you have to look at it from just a pure financial, a full financial view, if you have to take of be it the private sector banks, be it the NBFCs, be it the troubled financial pockets, what's the sense right now as to how would you trade each of these individual pockets? I mean, in terms of an investment idea.
No, I think clearly within the private sector banks, I think quality will become more expensive, and I think markets would obviously like to bet on well-established players like HDFC Bank, or typically the stronger names where asset quality and stability in numbers is much better. In fact, Kotak does trade at fairly premium valuations, but I think considering the numbers and the asset quality traction, I would believe that the smaller players would definitely have a problem, especially on the NBFC side. The bigger players could possibly be comfortable with liquidity, but the smaller players could possibly face some challenging headwinds, considering that typically I think now we are getting rating downgrades from CARE on housing finance companies like PNB. So I think we should definitely expect some further news flows on some other NBFC players, especially on the housing finance segment, where loan against property has always been a kind of a cautious and a pain point. So I think that is something which the markets are probably not discounting.
Are you buying Yes Bank right now?
I think, Neeraj, there's no need to hurry, because looking at the commentary...
No, how much further can it go down? So let me put it that way.
I think, Neeraj, I would look at it from the fact that unless we get a sustainable ROA of at least 1%,
which is in FY21.
Yeah, so I know it's going to be at least 2 to 3 quarters of struggle and pain, so it's not going to be in a hurry. And I think clearly the markets were clearly disappointed that the surprise element came in very badly. In fact, people were not expecting the loss to be so high. So I think markets were definitely not expecting a loss of this extent. So I think markets would obviously be very cautious on how the next quarter also pans out. I mean, hopefully, if this is the end of the bad quarter, that's fine. But otherwise, some more pain could come in at least for 1 or 2 quarters.
You know what? Most of the brokerages, though the bank has given a guidance of 1% ROA by FY21, but they have a target of below 1, and they think that the bank may not be able to achieve that target. And I think that was the key concern among most of the brokerage notes that they've highlighted. ROA, will they achieve 1% by 21, 1.5% by 22, which the management has guided? And also, how do they grow the loan book now? They have to raise some capital.
Exactly. I think on both the fronts, Navneet, it's going to be a challenge. Fundraising in terms of incremental capital being raised. And secondly, unless you get a sustainable ROA of more than 1%, the markets are definitely going to not give it kind of a re-rating, at least in the near term. And I think both these challenges are going to actually have an impact on the balance sheet growth. So I think it's better to wait and watch. My sense is at least maybe 1 or 2 quarters you could see the numbers, getting depressed.
Okay. Let's focus on some other stocks and would want Avinash's view here. Eveready is locked in a lower circuit after India Ratings downgraded credit rating. By the way, McLeod Russell has caught on to that fever too. Agam Vakil is standing by with the details and what could be expected here on. Agam.
Well, markets are certainly taking the news of the long-term ratings of Eveready being downgraded by India Ratings as a big negative, considering it is currently locked in a lower circuit of 20%. The long-term ratings, specifically in this case, from India Ratings perspective, has been downgraded on Eveready from IND A+ to IND A minus, and the ratings agencies also changed its outlook to negative. The reasons cited for this is one, high net leverage, and second, weakened liquidity. And I was taking a look at the debt numbers. While the debt to equity for Exide Industries is largely around the mark of 1, it certainly does have borrowings worth well over 300 crores. And this, of course, may come in and may be a little bit of a problem when it comes to servicing its debt, and that is also possibly the reason why we have seen India Ratings downgrade the stock. Hence, the stock is in a lower circuit of 20% right now.
Thanks for that, Agam. Avinash, Eveready down 20%, McLeod following suit down 20%.
No, I think, Neeraj, clearly, the debt servicing capability of both these companies have always been in doubt. And I think clearly if you look at the net leverage, especially the short-term funding which these companies used to take, I think clearly the markets are now worried as to whether these kind of short-term debt, requirements could be serviced by their operating cash flows. Our sense is that, if there is a default or if there is a kind of a cautious stance from the rating agencies, one could definitely expect, some sort of pressure on the earnings. And our sense is that whenever such kind of calls are given by the rating agencies, at least before an event happens, it definitely gives a feeling of discomfort for the markets. I would believe that looking at the way this industry has been growing and the way the company has been funding its growth largely from debt, and that too on the short term side, I think it would be wise to wait for some time. But yes, there is definitely some worry to this fact which has come out today.
We could look at the last 1.5 months performance of Eveready. From the time it managed to scale closer to about 217 odd, this was somewhere in the month of March itself. So start of March, second week of March is when it scaled about 217. From there it's down a good 100 odd rupees, and there's not been probably maybe a day or two where the stock would have seen a positive uptick on since that time, and it's been a gradual slope down. The last 1 month the stock has given up 40%, and that's what you've got Eveready at now at 117. From a trading perspective, just to get in a sense whether or not after the stock has done what it's done, Sacchitanand, would you short it?
Well, definitely not short. In fact, when we are talking about Eveready, I think the key support zone for the stock was somewhere close to 190. And from since then, since the breakdown, we have seen a consistent, supply, getting aggravated. So I think it is definitely not a shorting candidate. In fact, 117, 120, could be a zone wherein the stock could start stabilizing. If you look at the daily RSI, the reading is at its extreme. So probably, we may see a dead cat bounce kind of a scenario, and we may see some consolidation, but definitely, fresh short position should be avoided. Yeah.
Edelweiss is the other one I want to talk about. Currently at 146, and day in and day out over the last 10 days odd, the stock has just been totally thrashed out of shape. Now, after almost nudging 200, the stock's back to about 148. Last 7 days, it's given up about 17 odd percent. Sacchitanand, what would you do with Edelweiss?
Well,
Edelweiss at 146.
The stock is Edelweiss, right?
Edelweiss, yes.
Okay, the stock is quoting somewhere close to 150, and I think 150, 148 has been a very critical zone for the stock. So if you look at the next support zone for the stock, which is somewhere close to 133, and if you look at some of the oscillators, especially the ADX, it is not really indicating any firm upticks in the stock. So probably we may see it sliding further towards 135, 130 zone, and stock looks like in a bear trend right now. So probably if someone is holding on to the short positions, they should continue and review the stock somewhere close to 133.
Okay, that's the technical view on LYs. However, in the last 6 months, the stock's down almost 4%. Let's move on and talk about the chart of the day. Wipro has fallen behind its IT peers for the last few quarters, and that's prompted analysts to also hold back on their target price and rating on the stock. But the stock price has actually managed to prove most ratings wrong. Agam Vakil joins us to give us more details on that. Agam, over to you.
Well, actually, it may come as a surprise that Wipro, considering it has moved up quite substantially over the past few months, still has the most number of sell ratings in comparison to buy ratings on the Bloomberg consensus. As you can see here, Wipro standing right at the top with 21 sell ratings among the analysts tracked by Bloomberg. And yet, on a year-to-date basis, Wipro has advanced by as much as 19%, outperforming not only the Nifty IT index, which advanced by around 14%, but also the Nifty, which gained as much as 8% through the course of this period. Now, ICICI Securities is one of the few brokerages which is actually positive on Wipro, and the reasons behind this is, well, the deal traction that the company has got. Moreover, they're also suggesting that while they can expect a little more weakness to come in the first quarter of this upcoming financial year as well, eventually, given the kind of deals that they have signed, well, that could lead to acceleration in revenue growth, and hence they continue to remain positive. Of course, let's not also forget that Wipro has very recently also announced a buyback, and that has also provided some sort of impetus when it comes to its stock, and hence moving against consensus, which is largely negative as far as Wipro goes.
All right, Agam, thanks a lot for bringing that chart of the day for us. Well, clearly, as Agam highlighted, that cushion in terms of stock prices coming for Wipro due to the buyback they've announced. I believe it's somewhere at about 325 levels. And today's the day, by the way, where there is buying, which has emerged in the entire IT pack. So where Wipro is up over 1% in trade. You've got stocks like HCL Technologies, Infosys, Tech Mahindra. All of them are witnessing some bit of buying. 3.5% higher for HCL. This one also comes out, it's gone up on good volumes also in today's trading session. Tata Elxsi is also up in trade. Avinash, come in here on the IT pack. People call it safe haven buying now, and when we're entering turbulent times, we'll be getting the results on May 23rd. We're expecting a lot of volatility in the market. If one were to buy something right now, do you think IT would make sense? Keeping in mind where rupee levels are.
No, I think 23rd May, obviously, you're going to see either a one side upside or downside movement. But my sense is IT would definitely continue to be a very defensive, safe pocket. I think the names you mentioned, I think HCL Tech and Tech Mahindra, I think definitely any decline should be used as an opportunity to actually buy into these companies, because the commentary and the rupee headwind is obviously going to make margins get better, especially Tech Mahindra, the way the management commentary has sounded. Better numbers expected in the next 1 or 2 quarters, and I think their order book is also pretty solid. So I would believe that the medium and the larger companies both have a reasonably amount of risk reward, and I think looking at the fact that May has never been a good month for the markets, till the time the final event is out, probably you could see a little bit of run up further for these IT companies.
What is it?
If you had Indiabulls Housing Finance or Dewan Housing Finance in your portfolio right now, never mind what the purchase price was, would you get out of those stocks?
I would get out. I would believe that even as of now, there's a decent chance to make some money. My sense is, I think rather than being in high beta counters, it's better to be in more safer counters. My choice would be if you're slightly more aggressive, I think look at M&M Finance, which has now started a recovery mode. Asset quality has become positive, and I think in the next 1 or 2 quarters, this could be a stock where possibly a lot of underperformance has happened, and going forward, much better outperformance could happen. So I think pure housing finance companies, Neeraj, could be a little bit in a problem. And considering that today CARE has come out with a rating downgrade for PNB Housing, I think probably we could see many more companies coming up where the LAP portion is pretty large. As far as Indiabulls Housing is concerned, I think the LAP portfolio is pretty large. So any negative surprise there could possibly be bad for the stock.
So you bat more for consumer finance then?
Yeah, I think that is one area, Devina, where I would believe that even a higher price to book, especially companies like Bajaj Finance, which get a fair amount of premium, rating, despite the fact that valuations are expensive, I think the sustainability of that business is very solid, and I think liquidity concerns are also over magnified there. So I think Bajaj Finance also on dips could be acquired.
All right, we'll leave it at that. Thanks a lot, Avinash, for joining, and appreciate you taking out the time. Avinash Gorakshakar there with his views. Just quickly looking at the market shape right now. Not all that bad for the benchmark indices, though. We've lifted off from the lows of the day, and we're down just about 0.25% on the Nifty as well as the Sensex, though Nifty Bank is still under pressure by closer to 1%, weighed down by what's been happening in the entire banking pocket. A stock like an IndusInd Bank is given up about 5.5%. I should look at a Kotak Mahindra Bank now, because the last time we took a check was when it reported numbers and it was down 1.5%. And I think Kotak Mahindra Bank is now in the green by closer to about 0.75%. So not looking all that bad. Well, it's time now to take a short break on Countdown. On the other side, we get you the Fab 4 stocks of the day. At 3:15, we will get you what dealing rooms are recommending and some closing strategies as well.